Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that, LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at it in the YouTube index to find it. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece is the bright red upper time, currently at 13,383. That sits just above the top of the market and has capped, despite being significantly pierced on one occasion, that has capped a number of significant thrusts higher, seen in January, February and even earlier this week, now in March. Indeed, this is the key piece of overhead resistance and only piece of resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year, the July 2022 to January 23 showy bullish shift pitchfork. So this leaves us with the question, what now? Well, there are two possibilities, with one of them having a subplot, and none of them are really satisfactory. The first possibility was to look at the whole 2026 action so far as a complex top. And the best we can have as a proxy for a neckline is either the 50% Fibonacci line of November 25 to January 26 move at 12,571, or else in some unsatisfactory way the rising green short medium moving average, currently 12,938. I have been and I am still not at all comfortable with this last idea. The subplot to this is that we now have what looks like a multi-bottom diamond pattern formed between late December 2025 to date. It is not an easy diamond pattern, and with really increased chances of false breaks such as we might have seen over last week, I am not willing to just yet to call a diamond top pattern. This is despite the recent break lower. However, we should know more by the end of February. The second possibility is to look at this whole 2026 action as a possible hesitation, a possible bullish halfway hesitation running from as far back as mid-November 2025 action. To be honest, this is even more unlikely, but it would be churlish of me to not mentioning it as a possibility. This then leads us to what I said 2 weeks ago when I said, and for now I'll stick with this as an idea, and I quote, "Until things start to get clearer, I'll stick to the idea that we have a trading range between the 50% Fibonacci line at 12,571 below and the bright red upper time above." LME 3-month aluminium. The markets break higher in early January, up and over the upper time, currently at 1390, and out of the longer term December 23 to July 24 bullish shift pitchfork was a key event this year so far. We have seen this move eventually continue, sort of, and it has helped identify another larger pattern that has also been happening at the same time. This is not a very defined pattern. I don't think it has the required number of touches per side as yet, but we seem to have an April 25 to date very large rising expanding wedge pattern outlined in bright green on my daily chart, currently 2958 to 3417. We remain within this pattern despite a spike higher 6 weeks ago and the action last week and today, and at the start of this week and today. Though the repair is very fresh and I'm cautious about it being still there. Thus, as I said last week, and this is one to watch, this is the pattern. Interestingly, the action since December last year to date has also lent itself to be seen as a possible diamond pattern, but not to the same level as the one seen in LME 3-month copper. Here it looks less integrated and we have a contrarian move higher. These two moves allowed me last week to draw a new mid-December 25 to start of February 26 dark blue bullish shift pitchfork. And we are today, after a short breach higher yesterday, in between the upper time above, currently at 34.71, and a dark blue middle time below, currently at 32.78. More on this as it develops. Another feature to watch for, and one that became evident to me on my longer term chart when compiling the annual video commentary, you can find this on the ADM ISI YouTube channel, is a very large November 2015 to April 2020 bullish Andrews pitchfork, which I've transposed onto this daily chart, highlighted in purple. The nearest part is the purple middle time above, currently at 34.17, which has helped the bright green upper trend line to cap the market somewhat, despite a break. We're still under pressure at the moment. It's not unusual to see a market tackle two coincident resistances such as this at the same time, so that the effort is maximized in order to break higher. Now, 2 weeks ago, I said, and I quote, "I'm considering running an optimized uptrend, possibly from late January, even far back as November last year, just below the green short medium moving average, currently at 31.32. However, on reflection, why bother? As the green short medium moving average is doing a good job as a proxy for such an uptrend." End of quote. I have no qualms in keeping to that idea, keeping the green short medium moving average as a proxy for an uptrend now for a fourth week. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into the quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October and late November last year. And as I said 12 weeks ago, enough that I no longer think this pattern is viable as a rectangle. End of quote. The recent break lower from this pattern halted in mid-December last year at the 38.2% Fibonacci line of the whole of the 25 move at 1939, forming a 3-day bullish morning star pattern and moving higher up to test the high of 2025 late 8 weeks ago. That's at 21.05, and it failed there. I suspect this failure was mainly due to the nearby 50% Fibonacci line of the May 24 to April 25 move at 2098. Indeed, I think this caused this high, the high seen back in November last year, as well as the earlier in January this year high. Since then, we have pulled back lower, down through the close-knit moving averages. In the process, the market created a small January-based head and shoulders top, breaking below the dark blue neckline, currently at 1996, late 6 weeks ago. Primary target at 1964 was reached 5 weeks ago, but we still have opened the secondary harder to reach target X1 down below that important 38.2% Fibonacci at 1939, down at 1921. Now, I said 6 weeks ago, and I quote, "There is no real trend here, just look at the major moving averages, they're still closely packed together." End of quote. This has been the case until last week, as we now can see most of the moving averages are heading lower, which obviously does mean something, as does the pressing lower between the 38.2% Fibonacci line below and the mess of moving averages above, plus the dark blue neckline. Okay, so I previously noted 2 weeks ago how the build-up over February could be becoming a possible double bottom, but this pattern failed to form, and though we might still have become a lopsided triple top, I favour triple bottom. I favour, as I mentioned last week, the whole action from mid-January today as a possible bearish cat's ears pattern. Now, this is akin to a double top that you see forming after a steep fall, such as the one we've seen form since mid-January. As you can see, there is a lot riding on that 38.2% Fibonacci line, which has been breached, but under which the market has not yet stabilized. So please, because of this, please be aware of the possible false breaks lower. This brings me to my final point. It's a point I've been making here since the start of 2025, and I'll continue to do so going forward. It has been, and still is to me, the most important point of all. So, at the end of December 2024, we saw that 2024 had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, and indeed prices are only slightly lower today than they were at the end of 2024, which is, this is not an endorsement of the annual key reversal down, but neither is a strong countermeasure or repudiation of it. Hence, I still say, even now, With prices where they are, that one should still look at all things going forward in this coming year and beyond in this metal in the shadow of this longer term bearish pattern. Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.